Hello everybody, my name is Joey. I'm part of the Chart Guys team. I've been a full-time trader and technical analyst for 7 years, over 20,000 hours, and I'm here to take a look at the broad market after a crazy bear day today, following a crazy bull day yesterday on the FOMC reaction. And we're gonna look into the charts, see where bulls and bears stand, see what bulls need to do to try to prove something, see what bears need to do to continue proving what they've been proving. We'll check in on rotation. We will look at a little spot in the market that isn't getting bogged right now. And then we'll wrap it up talking bigger picture stuff and a little bit of chat about rate cuts. So let's get into the charts here. And we're looking at ES, the S&P 500 futures. We can see yesterday's big old bull day, today's big old bear day. And now from here, what bulls are hoping for is a 12-hour equilibrium with a low, high, and they want to form a higher low compared to this double bottom down here at 54.33. If they're going to do that, they're going to need to regain an hourly uptrend. Got a little bit of an hourly bounce underway into the end of the day, but certainly could be an hourly bear flag. And as we have Amazon and Apple earnings here after hours, that can certainly play a role in whether we stay within a 12-hour equilibrium or if bears take us lower. So tomorrow, any bounce, we'll go to SPY for this. Any bounce tomorrow, anything below high of day is just going to be an hourly lower high, and bulls would need to regain an hourly uptrend for us to say we're comfortably staying within this 12-hour equilibrium. If bears maintain control, we'll go back to the futures chart here. If bears maintain control and take us below our double bottom here at 54.3250, 54.33, then we're potentially losing the weekly 12 EMA. Right now, the battle is on with the weekly 12 EMA, and if bulls hold weekly 12 EMA on the S&P 500, then the status quo remains. Bulls are fine and everything is groovy. If we lose that weekly 12 EMA, what that does is it opens up space for bears to try to attempt a weekly downtrend. We have not had a weekly downtrend since 2023. So it will be notable the first time we get that. And for now, we're just looking for the weekly bounce. Where does it come from? So the new very clear line in the sand is the high of today. Bulls aren't going anywhere unless they break above that. And if bears break below the double bottom, they maintain their full control here. So looking at the NASDAQ, it is a similar deal in the shorter term, but different on the larger timeframes because we already have room for a weekly lower high. Similarly, we haven't had a weekly downtrend since October. It will be very notable if we get one. And also similarly, we're looking at the potential for a 12-hour EQ. Low, high, and bulls are looking for a higher low compared to 18,725. They definitely would love some help from Amazon and Apple earnings, and they very well may need it. So similar to SPY, anything below high of today is going to be an hourly lower high tomorrow. Bulls have to regain an hourly uptrend to look to shape up a 12-hour higher low within this equilibrium, and that is that. So if we do get these 12-hour equilibriums, the direction they break will shift the odds of what we get on the weekly. If we continue to tighten up here like this, and then the range breaks bullish, that's likely a weekly bounce getting underway. On ES, if it happens from here, that could be a weekly bull flag. On NQ, if that happens from here, we'll have to remember that we're looking for a weekly lower high as the most likely scenario on that bounce. If those 12-hour equilibriums form and then break bearish, then that is just bears creating more room for weekly lower highs on the next bounces there. So looking at RTY, we've got weekly consolidation underway. We had a nice daily 12 EMA rider, daily uptrend. We broke to new highs yesterday and then very quickly gave it all back in a little bit of a short-term blow-off top if we go look at the 15-minute yesterday. But very much so, a little short-term blow-off top. This was the red flag, and we were talking about it in the chart guys yesterday, and we said if bears can take out the low of Wednesday on Thursday, then we would have to watch out for the potential that that leads to weekly consolidation, because very often a break without follow-through ends up leading to a pivot on a larger time frame. Couldn't have anticipated that we would be down over 3% here today, but bears brought the volume, they maintained control all day, and now we got weekly consolidation underway. So the big question here is going to be, is weekly consolidation healthy? Bulls want to hold the weekly 12 EMA, the 0.5 retrace of the move from down here at 1993.5 up to 2320.5. And if they hold the 0.5 retrace, then everything's fine. Weekly uptrend can stay healthy. If we lose the 0.5 retrace, then we really got to start thinking about the similarities between this sideways range and bull break and the sideways range that we had from the beginning of 2021 all the way to the end. So to talk about the similarities, the rest of the market was ripping during this period, and then we got RTY popping as the laggard, and ultimately that was dashed to trash, and that led to the tops of the overall financial markets in the beginning of 2022. So here we have a decently similar situation. Much of the market had been ripping throughout this. We got our RTY pop. Is this dash to trash or is it healthy rotation? No one knows. Time will tell. And the next crucial piece of information will be, well, there will be two things. One, can bears confirm a daily downtrend from here? If they confirm a daily downtrend from here, that is an additional point towards dash to trash. Maybe we need to watch out. If we hold the 0.5 retrace, everything's fine. If we lose the 0.5 retrace, that's an additional point towards the potential that this could be dash to trash. So we'll get new information every day, and we'll continue to adjust probabilities and shift odds as we get that new information. So similar to SPY and QQQ, lots of room for an hourly lower high compared to the high of day today, and bull's going to need to regain an hourly uptrend to regain any mojo here on the Russell. Moving forward to XLF. So after a double top at all-time highs, bulls were hopeful that this could be a cup and handle, but that would have required healthy consolidation. A 1.42% move down, retracing more than 50% of the move up is not healthy consolidation. Bulls are hopeful that they can maintain an equilibrium up here, and if they're going to do that, they've got to hold 42.58. If they're going to hold 42.58, need to regain an hourly uptrend, and that is that. Anything below high of day today going to be an hourly lower high tomorrow, and we'll watch bounce retracement. Do we reject from hourly 12 EMA and be a potential bear flag to see another leg down, or do we see a big enough bounce to create room for an hourly higher low and set up the potential for a trend change? And if we get that daily equilibrium, the direction it breaks will tell us, are we joining everyone else in weekly consolidation, or are we going to push through new all-time highs? So this is an important concept that we saw here today. We had all major sectors hitting the low of the day at the same time early in the morning here, and that is XLF, QQQ, XLV, and Dan doesn't use IWM, but I like to throw IWM in there just because it's one of our 4 futures indices. All of those hit the low of the day at the same time, and Dan has a hard cut rule that if we have all major sectors at the low of the day at the same time, that means we're not seeing rotation. That is money leaving the market. If money is leaving the market, your odds of catching a bounce are diminished. So he does not play bounces on days where all major sectors are hitting the low of the day at the same time, and more often than not, it ends up saving him. We bounce still on those days, but it's about probabilities. Your probabilities of catching that bounce are very low compared to a standard day where we have rotation. So I talk about that here because at this point, we've still got XLV up at the highs, we've still got XLF up at the highs. We've got IWM consolidating on the weekly, and QQQ and SPY have been consolidating on the weekly. If bears want to really make a statement and they want the S&P 500 to verge into the unhealthy territory, they need to take out our stronger sectors that are remaining, which is XLF, still just a weekly stair step, and XLV, still just a weekly stair step. So that's what bears want to do. Bulls want to continue to see this rotation. They want to see SMH and QQQ get weekly bounces underway while XLV, XLF, and IWM see weekly consolidation. That's the rotation that keeps money churning and keeps the overall market healthy. So that will be a big piece of information that I would think we'll get the answer to by the end of next week, but I suppose it could take an additional week after that. So looking into XLV here, we did have the push down on the morning. We'll go into the 15-minute time frame. So this is when all major sectors hit low of day at the same time, and bulls recovered from there. They recovered from there, set a daily higher low off the 12 EMA, which we have been riding, and that kept things from getting ugly for SPY because we still had a major sector fending off extreme downside. So just going to continue to watch this daily uptrend, daily stair step, or weekly stair step, excuse me. And we've got a lot of room for an hourly higher low compared to 149.49 come tomorrow. So looking at SMH, very weak, pushed down to new lows. So bull hope here, now that we don't have the 12-hour equilibrium that we're looking for the potential of on ES and NQ, bull hope here would be a megaphone. So they would have to control tomorrow from right out the gate, and that is that. So looking at the hourly, it's going to be the same deal as the S&P 500 and QQQ. Anything below high of day today would be an hourly lower high tomorrow. And if bulls are going to prove anything, they need to regain an hourly uptrend. If bears just push lower and see follow through below this 228.33 support, then that's just weekly consolidation, continuing deeper, and bears creating even more room for a weekly lower high next bounce. We've lost the weekly uptrend in 2024, but bears were unable to confirm the downtrend. Is this time going to be different? If they confirm the downtrend for the first time in over a year, it will be notable. We'll need to make sure that we adjust our trading as market environments shift. So as far as bigger picture, as long as the monthly uptrend is intact on all of these names, everything from a macro perspective is fine. And while we're talking about the macro perspective, let's talk about rate cuts a little bit. As things stand now, there is an 87% chance of a rate cut in September. You will see a lot of folks online rooting on the rate cuts because on the surface of the mind, it seems like that would be good for the economy, good for the markets. But the data is actually to the contrary. So if we look at this little graphic here, I'll make it a bit bigger. This is the performance of the S&P 500 after the Fed pivots. So we've got negative 35%, negative 58, 51, 27, 48, 36. So you got to ask yourself, if you really want the Fed pivot, we don't get to choose what we want in the markets. We have to just take what the market is giving us. And if we get that pivot, we've got to be cautious of the history of these things. If we're going to get a 30% pullback in the S&P 500, we're going to lose monthly 12 EMA. We're going to lose the monthly uptrend. These things don't happen overnight, but knowing that we have a very strong statistical indicator of downside coming with a Fed pivot from a high inflation environment, it's something that we need to make sure that we have plans for. You don't want to be figuring out your plan live while you're under duress. You want to have your game plan set aside ahead of time so that you're just executing your game plan. You're not trying to figure it out in the moment. So moving on here to the VIX. So daily 12 EMA rider. Just going to keep it nice and simple here. We know that it wouldn't be shocking to see a monthly lower high. We've been setting monthly lower highs for quite some time, and key resistance up here is 2136. Not too far away as things stand now, but if we're going to get the monthly lower high, which would coordinate with some legitimate weekly bounces in tech, semiconductors, S&P 500, then step one is going to be losing daily 12 EMA. So I'm going to go ahead and set an alert here myself and keep tabs on that as we look to see a couple things with the VIX. One, do we start to see some divergence where the VIX stops going up when the markets are still going down? That's one thing that favors bulls. Another thing could be the VIX continuing to go up while the market tries to put a bottom in. That would favor bears. So you can always kind of use this divergence with the VIX as just a slight shift of the probability needle. So let's move on through some more here. So gold continuing its daily stair step off of the low. Weekly higher low is set. And if bulls want to be confident and follow through, going to need a daily uptrend confirmed from here. Just watching the 4-hour uptrend, 4-hour 12 EMA support is the guide for the daily move in conjunction with that daily stair step. Silver, not quite as nice of a story. Daily lower high is already set, though we do have room for a daily higher low to form compared to 2745. If we zoom out to the monthly, we are looking for a monthly higher low. We've got tons of room for it to form. The first baby sign of that would be a daily uptrend from here, but bulls have their work cut out, and the XAU-XAG ratio, which often gives big time clues in the metal space, is looking for a monthly lower high. When this chart is going up, typically the metal space is going down and vice versa, and we've got room for a monthly lower high. We're looking for it, but similar to how silver needs to get a daily uptrend, we need to see a daily downtrend on this ratio. So it was just a stair step off of the low, healthy daily consolidation at this point, potential daily bull flag. So going to need to see that turn around if we want silver to come back on the map. Looking at oil here, we've got a beautiful tightening range that has been forming for quite some time, and it's going to be lovely when it breaks. We'll anticipate volatility and opportunity to increase, and we're starting to get tight here. So bulls are looking for a weekly higher low compared to 72.48. Need to regain a daily uptrend if that's going to form. So enough room on the daily bounce to create room for a higher low, and got to get that trend change if we're going to talk about continuing to tighten up within this weekly, monthly range, whatever you want to be looking at it as. And let's do some Bitcoin. So Bitcoin joining everybody in weekly consolidation. We know that Bitcoin remains strong as long as monthly 12 EMA is support. And the big question will be, can bulls confirm a weekly uptrend from here to have us looking at all-time highs? Or do bears take us down and have us looking back to the monthly 12 EMA? So long as monthly 12 EMA is support, everything is fine. Bigger picture, if we were to lose monthly 12 EMA, that is when we'd have some like 6-month consolidation shaping up, and a lot of altcoins have potential 6-month tightening ranges. Bitcoin doesn't have it because we broke to new all-time highs marginally, but the spirit of it could certainly remain there. So let's look through at somewhere that isn't getting smoked, that is usually getting smoked. We've got the MJ sector just kind of holding on, and with how it's behaved in the past, it just usually gets sold off with the market. So bulls love to see that. Perhaps traders just waiting around for a catalyst as we get closer and closer to the election. But we can just look at this as a weekly tightening range. It's not technically an EQ, but you've got your low, high, slight lower low, no follow through, double top, and now we have bears getting a bout of weekly consolidation underway here, only by 2 pennies. But bulls looking for an election play are looking to play off of 680 on this consolidation. Want to see bulls regain a daily uptrend to try to get a weekly higher low shaped up, and ultimately nothing really going on here. But that's chill, and bulls will take it. And when things are kind of chill, it does make positioning a little bit easier. So we've got that. We've got NVIDIA, just absolutely crazy volatility for a name with such a large market cap. Let's start on the monthly. So we have monthly consolidation underway. As long as the monthly uptrend is intact, bulls maintain full control. We've got a weekly downtrend as the guide for monthly consolidation, and we got bulls hoping to shape up a weekly bounce here. If they're going to do that, they need to confirm a daily uptrend. After yesterday's action and this morning's push up, it looked like very good odds of doing that, but we've already retraced well over half of the move up, and I would put it in the same category as NQ and ES in terms of, bulls are hopeful for an EQ, like a 12-hour EQ at this point. And then if that EQ breaks to the upside, that's a weekly bounce getting underway. If it breaks to the downside, then what are we looking at? If it breaks to the downside, then we're looking to monthly 12 EMA. Daily oversold conditions, monthly 12 EMA. We got very close to daily oversold, but didn't quite tag it. And you can bet your bottom dollar that's a back burner after the crazy move that we've had on the way up. And let's look at Tesla. So Tesla's interesting here because bigger picture, we'll start zoomed out. We've got a quarterly equilibrium, high, low, lower high, higher low. Bears hoping for a lower high compared to 300 up here, and bulls hoping for a weekly higher low, holding weekly 12 EMA. So it's a battle of the time frames, and if bulls hold weekly 12 EMA, then the quarterly move remains strong. If we were to lose weekly 12 EMA, that's when bears are creating room for a weekly lower high, and if they confirm a weekly downtrend, that's where we continue to tighten on up within this quarterly range. So not the most impressive bounce off the lows. and bears have us right back down at them. 214.71. It broke here today by 38 cents, 214.33. And we'll just watch our daily downtrend as our guide for weekly consolidation. This is the type of scenario where you could have a break of support right into the weekly 12 EMA in short time frame extended conditions, which is an environment ripe for a lack of follow through. You typically have two things when you're going to see a lack of follow through. Extended RSI levels on some time frames, more the better, and a larger time frame reference point, which in this case would be the weekly 12 EMA. So going to be keeping eyes on that. And that's all I've got here for today. So feel free to ask any questions you got in the comments. Hope everybody's faring well. It's always a little tough when you get volatility like this. Experienced traders hope to make their months on days like this, but as you're learning, it's one of those days that can be very punishing. So hope everybody fared well, and we'll continue to track the action into next week as we try to see, is the market going to stay healthy? Do we continue to see rotation, or do we see an exodus of capital? Thanks for tuning in. We'll see you next time.